We're turning now to China. The Shanghai Composite hitting highs today, not seen since 2021. And it was one of the best weeks of the year for the Chinese blue chip index, the CSI 300. At the same time, this week's 13F filing showing a broad pullback in Chinese equities from the biggest hedge funds, at least here in the U.S., including Bridgewater completely exiting its U.S.-listed Chinese holdings. So should you be allocating cash there? Well, joining me right here on set is Beeneet Kothari, founder of hedge fund Tekne Capital. He is a former portfolio manager for Stanley Druckenmiller's Duquesne Capital, and it's great to have you. Welcome.
Thank you, Morgan. Thanks for having me.
So we were just talking about in the commercial break, China's in a bull market, and I think a lot of U.S. investors don't necessarily know that or are paying attention to that. What are you seeing?
So look, the economy bottomed in November of 24. 6 out of the 7 major indices in China are in a bull market. The Hong Kong IPO market is having the best year since 2021. They've raised more money than any other market, and it's a bull market after about a 3 or 4 year bear market, and this is where we think you find the best opportunities.
So where do you see those best opportunities?
The biggest thing going on in China, the biggest thing going on in the world is AI. Here's the problem: in the U.S., we are in year 3 of the AI market. ChatGPT got launched in November 22. In China, it's day 150. DeepSeek was earlier this year. And you know what's going to happen over the next 3 years in China. It's the same thing that happened over the last 3 years in the U.S., which is a massive build out. And the Chinese consumers are adopting this. You know, Sam Altman disclosed that they've got about 10% of the world, ex-China, using their products. In China, it's a quarter. So you've got a massive market. They're ready for this, but it's early. It's day 150. So we think the data center space, so we own a company called GDS. This is the landlord of AI in China. This is where we think you're going to make a lot of money over the next 2 to 3 years.
Interesting. And we talk a lot about trade and tariff dynamics between the U.S. and China, national security dynamics, tech decoupling. I guess how to think about the risks to invest in some of these companies, and perhaps just as importantly, are you investing in Chinese companies listed in the U.S. or listed elsewhere?
So I think the first thing is we've seen President Trump walk back a lot of the really aggressive measures on tariffs. I think just this past week, he delayed the August 12th expiry another 90 days. It's quite likely that you see more and more of that. I think tariffs are a distraction. I think the big story in China is they are going to become, as far as technology goes, completely independent. So what we think you want to own are Chinese companies that are supplying to the Chinese technology sector. The biggest one there are semiconductors. You know, the U.S. and China want to decouple. And so the answer there isn't to get bearish China. If China and U.S. want to decouple, the answer there is to get bullish the Chinese supply chain. And that's what we're looking at. There's a number of semiconductor companies in China that today have a market cap that is a fraction of the big U.S. and Western semiconductor companies. And that's going to equalize over the next 5 years.
So you'd invest in some of those names as well?
Exactly.
What are they?
So you've got companies like Naura, AMAC. These are $20, $30, $40 billion companies. That sounds large, but the equivalent U.S. companies, AMAT, ASML, Lam, have a combined market cap of $1 trillion. Another company that we are looking at a lot is, and we're shareholders in, is DiDi. So DiDi is currently the largest company on the pink sheets. It's a $20 billion, $30 billion market cap. It's bigger in terms of volume than Uber, but it's got the valuation of Lyft. And what's going to happen, the story in China over the next 6 to 12 months is going to be the IPO market's going to fully open up. So you've got a bunch of IPOs that people are waiting for, Ant Financial, you've got ByteDance, you've got Shein, and the big one is DiDi. And I think you can't buy any of those companies in the public market today. DiDi is one that you can buy in anticipation of that IPO market.